There's the bell, and we'll talk about that in just a moment. We welcome all of you to Trading Growth and Value Stocks. My name is James Boyd. Alongside with me, my good friend Michael Fairborn in the chat. We welcome him. And also we got BJGH as Grace H. We have got Double B as Bill Barnhoff and Sharon X. Welcome. Kevin, Josh Pink, and many others. Welcome to all. Let's go ahead and hop right in. Now today, our focus, what I really want to talk about is executing sell decisions. Have you ever met someone who talked about how well they were doing when the market was going up, and then you just didn't hear much when the market went sideways or started to pull back? Today we want to talk about really executing like sell signals, okay? It's not just about getting in, it's about when to consider selling and why that is, when that's likely to occur, and kind of practicing that. Now, here's the thing. Our class is going to be stock-based. It doesn't matter. It could relate also to derivative type strategies as well. So that's going to be our focus here today. We're going to also talk about some tools we're going to use to identify that. Second, we're going to talk also about maybe a bearish or two example. And then we're going to talk about maybe some stocks that might be bucking some trends that might kind of have some underpinnings of demand on them that might even go up if the market were to pull back. And we'll talk about that. Now, as we bring this up, it is important to recognize that you can have bullish positions in a portfolio and bearish positions at the same time. To regular people, that might blow people's minds, but welcome to the stock market, okay? Now, just real quick as we get going here, remember that when we talk about the examples and the information here, it's provided for general informational purposes only. When we also talk about examples, we want to remember that Schwab does not recommend the use of technical analysis as a sole means of research. Now, quick heads up, next Tuesday, we're going to really talk about intermarket analysis. We're going to talk about how different asset classes, how they correlate with one another, okay? It's one of my favorite discussions. I haven't ever done it, and we're going to talk about some of those relationships and situations that our current market has been in, and what are those what are some of those relationships historically, and where are they now? So do not take the day off of work next week. Next Tuesday, 11 a.m. Eastern, just say, look, I'm tied up. I'll come into work after that. And it would make sense to do that. Why? Because you're not going to see the information anywhere else that I've ever seen. Okay, I'm going to share with you next week at 11 a.m. Eastern. Now, remember when we talk about examples, we will use the Paper Money software application. Also, investing involves risk, including loss of principal. And also remember that you can also go to the schwab.com and see our in-person events. We will be next at the Anaheim event, which is Advanced Options, May 30th and 31st, a live in-person event. Cost, round number of 0. You're investing your time to learn in a live market environment. We will also be in Miami June 13th, and we will also be in New York June 28th. Now, the June 13th and the June 28th is a one-day format. Joe Mazzola and others will actually be there talking about the market specifics and kind of what's happening in the market from their viewpoint. So check those out. Now, just real quick, when we talk about here today, I mentioned we want to start by talking about the VIX, okay? And we want to kind of use that. That's kind of the, if you will, when you go to an airport and you see the windsock, okay? And the windsock near the runway kind of tell you which way the wind is blowing. Well, we like to use the VIX as the windsock. Which way is the wind blowing? Or is there wind in general? Okay, so we're going to start there. Then we're going to talk about some of the relationships that we're seeing right now and have seen over the last probably 2-3 days. And then what we're going to talk about is selling criteria, okay, considerations, and then we're going to look at some examples. Now, by the way, as we go, if you have questions that come up and you just say, James, my heart is full and I got a question, go ahead and ask that question, okay? Now, what I want to do just real quick first is I want to just bring up VIX, okay? Now, I want to give proper credit where proper credit is due. Lisa brought up the example of, Lisa Jack that is, brought up the example of looking at the VIX, right? And we kind of said, hey, we're going to continue to monitor that, okay? And what you're now going to notice is we talked about the divergence on the chart. So lower lows, right? And then what you're going to see is lower lows, and we got lower lows. Now, so the price was going one way, but the oscillator of the MACD was going the opposite direction. Now, that doesn't mean that it breaks out on that day. We said, and I'm recircling back now, we said we're going to continue to watch that. Today, probably about 3 to 4 hours ago, and I posted on X when we saw it, we kind of started seeing the VIX do a nasty candlestick. Boo! And that candlestick was kind of like a hammer-like candle. It looked more like hammer-like candle in the middle of the day. But you're going to see that it finished here. We did not like to see where the intraday low was because it was right at the 10-period moving average. And if the price can stay above the 10-period moving average, volatility could increase. Now, when we talk about if volatility increases, people tend to go to gold, okay? They tend to. That's a relationship, okay? Maybe a potential outcome or likelihood. Well, they could go to gold. We talked about they could go to staples, which they have been going. They could go to utilities, which they have been going to there as well. Real estate as well. And also, if you take a look at that, the lagging one is healthcare. Usually is there, but they've been under severe regulatory pressure as of lately, and UNH has not been helpful, dragging that neighborhood down. So in this type of environment where we actually see, let's say, VIX up, when we talk about categories, okay, categories, we're probably going to see, let's say, income probably trading better than growth, okay? We're probably going to see value probably have a little bit more premium than growth, and we're probably going to see growth, okay, underperform, or I should say growth could have worse performance or likely to have worse performance than SPX, okay? So in this type of environment, those growth areas, and when we say growth areas, we're going to really focus on two of them. Technology for sure, number one, and number two, discretionaries. Those two are the areas, when we say growth, they tend to do worse percentage-wise than the SPX, okay? Now, what I want to do here is when we take a quick look at the market, so remember, we're using this as the windsock, right? What's going on? If this chart is going up, what happens down the road? Well, gold, right? Typically some precious metals maybe get a little bid. They have been. Utilities, staples, when you look at the IXU, etc., that actually sold off today, but still still hit a brand new high yesterday. When you look at the IXRE, dollar sign IXRE, you're going to see that got pushed down, but still that's been one of the decent performers. And if you take a look at, let's say, the IXR, and you're going to see that, yeah, that sold down 1%, but it just hit a brand new high yesterday. Remember something, that it's not saying that these areas are going to go up, but when you look down the road percentage-wise, maybe 1 to 2 weeks out, perhaps if the market were to sell off, these areas tend to not be down as much as the growth areas. So when we say the income areas, what are we saying? We're saying stocks or sectors that typically pay dividends greater than probably 2%. Now, when I say the word dividends, it triggers a thought. Are dividends guaranteed? No. They could go up. The dividends could go up. They could flatline. They could cut the dividends some. They could cut the dividend completely, okay? It is not a fixed income product. We're talking about a company that's paying some dividends on an equity, okay? Now, what I want to do is, are there any questions? So this class is on trading growth and value. Now we got trading growth and value. Trading could be buying and selling. Now, if you ask most people, what are they better at? Are they better at buying or are they better at selling? I think most people would say, I'm not really that good at selling. I don't really know when to sell. And if I did know when to sell, I'm not good at executing it. Now, I know how you feel because I know a guy just like you or a gal just like you who lives close to where I do. It's me. The biggest actually thing is, what are some tools that can help us try to make a decision? That's sometimes hard for people to do. Make a decision. So what I want to do is I want to bring up the paper money account, and I want to kind of talk about some things that we've used over time that are helpful, okay? Helpful in terms of identifying what is happening to the position. Now, one thing that happens is when someone says, look, I got lots of positions, what happens is, they tend to feel a little overwhelmed, okay? They got lots of positions. One of the things we try to do not to be in that situation is categorize your stocks by what type of strategy they are. And about an hour and a half ago, I talked about that in Getting Started with Thinkorswim. So if we had, like, for example, like stocks, and if I had other type of strategies, I want to put the stock symbols in the strategy folders. That's first off, because if you just kind of have a long list of stocks and then you have to decipher what they really are, it's just an extra step, okay? And you want to try to simplify and put things in smaller piles or folders like we have here. Now, second thing we actually look at is when we take a look at this, last Friday we talked about using like 8-day low, 20-day low, 10-day low, and so on. One of the things that I like to do is I like to kind of have the 8-day low, the 10-day low, and we could put the 20-day low on and so on. I like to visually see where that low is, okay? So the trade price on Amazon was 200, okay? The mark where the stock is right now is at 201. And we can see where that 8-day low is. So if I went to the chart and I said 8DL, that's going to tell me what was the low over the last 8 days. We talked about that on Friday. We said, hey, look, if the stock price is going down below that 8-day low, that's where some shorter term type of traders might have their stops. Now, if someone says, James, I like to give it a little bit more wiggle room than that, well, we can see that it's at 188.82. Well, what am I looking at? Well, what we're doing is we're looking at where's the mark in relationship to that 8-day low. And if that mark price is getting closer and closer to that 8-day low, we know if we had a stop at 8-day low, that stop out is coming quickly. It could come quickly, okay? So that's number one. Now, if you said, James, I'm using a 10-day low, well, that's going to be a little wider. We're about $12 away. So I want to kind of know how close are we to the stops, okay? Now, what kind of might give us an idea that something could be closer in getting stomped out? Oh, the number one thing for sure would be trend, right? That trend column right there, the stocks that kind of concern us is number one is the stocks that are in trend 4, okay? And what does that mean? The stocks are above both moving averages, but up near resistance. Second, if it's trend 5, it actually means the stock is fallen down below the 10-period moving average. Wait, if you fall down below the 10-period moving average, what does that probably mean in terms of a stop loss? It probably means that your stop loss is probably nigh at hand, okay? That just means really, really close. Now, you're also going to see that something else that would probably tell us that we're probably really close to getting a stop out or things are changing. If that 10-day whole moving average goes red, and that's another sign, showing signs of weakness. If we start showing signs of 1 day, 2 day, 3 day like it is, that whole moving average has been red for 3 days. Okay? Now, these are warning signs. Okay, so I want to kind of just make sure we're crystal clear on this. What's giving us the idea that we're probably going to be seeing more selling signals, potentially, based on criteria, than buying signals? Number one, the VIX. If that VIX is starting to go up, which we saw today, okay, well, that's going to tell us that these next things are going to happen. What next things are we referring to? Let me write them down so we can just make sure we're all on the same page. So if we start to see the whole moving average, HMA, the 10-day, that actually goes red. This actually tells us that the momentum on the stock is pausing. It's starting to pull back, okay? Now, if you said, hey, James, what about the 20-day? If that becomes red, now what do you think? Well, here's the deal. I mean, that's kind of like the lagging indicator. Which moving average are we watching the most? We're watching the 10, okay? If that 10-period moving average goes red, that's the first sign that sellers are starting to press down the stock, and buyers, cricket, they're not stepping in to buy. The third thing that would actually also tell us that, hey, we could be getting some selling pressure as well, trend. And I labeled it below, trend 4 and 5. If we see trend 4, luckily, probably, that trend probably hasn't dropped a lot yet. That's good. If we get a trend 5, that actually means that there's been some selling pressure because the price is below the 10. Now, if it's done that, we would probably also say is, where's the stop? And so now all of a sudden is number 4, is we would be looking at the 8-day low, the 8DL, the 10DL, the day low, which is just telling us number-wise, where are those lows in relationship to the current price. Now, here's the deal. I want you to kind of act like you're a portfolio manager and someone's paying you to protect their capital. And they say to you, I have one underlying common denominator. I am looking for, the investor says, I am looking for the price of the stock or whatever we're talking about to be above the 10-day EMA, okay, or the 10-day haul. It doesn't matter. The 10-day EMA or the 10-day haul, whatever, okay, either or. What's the difference between the haul and the EMA? The haul is going to be like it's a weighted moving average. It's higher weighting than the EMA. It's going to track the price of the stock more closely, okay? So if the investor says, James, the investor's, portfolio manager's job is to protect the capital. If they do not see stocks above the 10-day moving average, then we would kind of say that there's chances, well, if we got down below the 10, we've made, in the shorter term, what have we made? We've made a lower low. Because that 10-day moving average can act like a support level. Number 2, if we broke support and we made a lower low, what tends to happen after the lower low? Well, you actually tend to really get, with that, potential lower high. If you break support, you make a lower low, you make a lower high, you're in a shorter term pullback, okay? So now, by the way, James, could all these things, 1, 2, 3, and 4, could they all relate to each other? Sure, but how does it start? It starts when that, for the most part, VIX rises. James, can you get the market to go up, but then the stock goes down? Yes. Sure hope that's not the case. But a lot more than not, it's when the VIX goes up and then the stocks on a majority basis fall. Okay? Now, let me kind of show the example of this. So let's say we said, hey, look, James, I want to sell the stocks where we're starting to be in, let's say, a trend 5. That means the price is down below the moving average. And I want to sell the stock when we have a red line on the moving average. Amazon did that here today. Now, let me tell you why some people don't sell. Well, James, I just got in 3 days ago. What does that have to do with anything? James, for example, I'm only up $23. I want to sell at a higher profit. What does that have to do with anything? A buy signal setup is a setup to buy, and a sell signal is a sell signal to sell. Sometimes you're going to have trades that are just kind of more flat. What the investor is more focused on is not the $23 or when they got in. They're focused on the, say it out loud, I can't hear you, capital, okay? They're protecting the king and queen. So if we said, hey, James, I want to sell when we get these trend 5s, I don't like that. The main common denominator of the portfolio is try to own the stocks that are above the 10. When they're below the 10, the investor says, I don't like those stocks, and they're actually pulling back, and they might be able to try to buy those stocks when they're cheaper. Second, if we actually saw, hey, James, when we have the 10-day whole moving average red, that's a first sign of selling pressure. Could those two correlate? Absolutely. James, I actually like to set the stops. I have a stop set at the 8-day low, etc., and I am very dadgum close in terms of getting stopped out, and I can visually see that. So here's what's very important. If you're counting on that when the market pulls back, that you're going to pull up your 22 positions, I would say that's probably not likely. And you're probably not going to look at it. If you had 22 positions and they were all going down, then most of us would bet against that investor who's going to look at 22 positions that are dropping from the sky, and they're all red. Because after a while, a normal person would say, I can't take it anymore and look at it. I'm just going to buy and hold because it's a good company. But then all of a sudden, are we really a technician? And that's where we got to ask the question. So there is a part of psychology in this, but we want to talk about execution. So if we said, hey, we're going to actually right-click on this, create closing order, sell the position. Now, what we got to get out of our mind is if we sell a stock like Amazon, that the investor could never get back in. And that's simply not true. They could. They're just trying to own it when the trend is in their favor. Make sense? Okay. Now, if we sell something, the investor's not focused on the profit and loss per se. They're more focused on protecting the what? The capital. And I'm going to tell you right now, any investor worth their salt, any of them, I've never met an investor that says, oh, I've never had any losses. As investors, you have losses. The good investors are really, really good with admitting when the trend is against them. And they recognize it sooner than someone who's maybe newer, and they're delayed in recognizing what's happening. Now, the point on the monitor tab is to try to stop, to limit that delay, to put it in the investor's face. And even if they said, look, I still don't see it. I want to see what this looks like on the chart. I want to see for myself. And then all of a sudden they can say, oh, this makes sense. I see the red line on the moving average and those orange and purple color candles, which are trend candles. Oh, I see now. Okay. So the chart, what it visually looks like, is trying to help the investor see what's on the monitor tab. All right. Now I'm going to right click on that, create closing order, sell. Now here's the thing that we need to also understand. So if the investors, let me tell you some things I've learned. Let's say the investor has 15 positions and the market pulls back. Is it a good idea to try to short-term trade the whole entire portfolio like we just discussed? The answer, no, it's not. Why is that? Well, because you got to understand something, that when you sell some stocks in the short term, and let's use the model of 70% intermediate to longer term, 30% short term. The reason why it's not a great idea to sell everything in the shorter term is because if the market were to bounce, to reallocate the capital and to get back in, that takes time, okay? And so that's why some investors like to have some quality stocks that they think could trend up over time. And if those stocks were to pull back, they have probably some fundamental tailwinds and trend that could probably bounce to the upside. So you might choose some stocks and you say, James, these are my trading stocks, okay? And these are ones that I kind of like to do more intermediate to longer term. That makes more sense than just saying I saw all 8 stocks sell off and I sold all of them. Now I have no positions. That's pretty dangerous. Be careful, okay? I'm not really sure if that's time tested, okay? That's why some people like to have some quality names fundamentally and technically, okay? Now, number 2, if I look at Cardinal Health and said, do we have a sell signal on Cardinal Health? Well, Cardinal Health doesn't look like Amazon, okay? So that one's it's not there yet, okay? And we're not at the 8-day low yet. On this one right there on Mo, we're not at the 8-day low yet. Neither do we actually have the trend there. Neither do we have the 10-day hole that's actually red yet. And if I look at Travelers, the answer is we don't see it. We're at 271. The 8-day low is at 261. We don't have the trend in a 4 or 5. And what you're now going to see is the whole moving average is currently still sitting in green. Now, James, could that change in the day? You better daggum believe it. Okay? So these are some things we like column heading wise to track what is going on with the positions. Now, what I'm going to do is let me just go back and just kind of see if we can't see one more example. So let me ask you a quick question. This is going to be your in-class quiz. If we said, hey, there's two stocks that are concerning us in the stock portfolio, which ones would they be? 5, 4, 3, 2, 1. The reason why I ask it like this and put pressure on you is a lot of times when people say, well, I don't know, I got all these stocks, and you have to pull up each one on the chart. We just kind of said, be careful about that, okay? Which column are we going to go look at? Well, we're going to go look at the number one column. We would start off at the trend column and or that 10-day hold column. And could those relate to each other? Of course, okay? Now, we just got done talking about Amazon, but Amazon's also in the IRA. And if we actually said, hey, I don't like stocks that are in that trend, we could actually say we're going to execute a sell decision. We also see that on the 10-day moving average, the whole, it's been green, red for the last 3 days. The other one that we actually see that maybe the investor says, hey, warning, on the chart, it is Boeing. Yeah, but I like Boeing. I think it could go up. Look, you're not the attorney. You're not the lawyer for Boeing. You're a technician. You're a fundamentalist. The investor's job is to protect the capital. No, but I want to make money. Protect the capital. Second goal is to actually try to make money. If you don't have any capital, how are you going to make any money? Right? So that's what it goes down to. Protect the capital first. Need the capital to try to make a return on the capital to make the income potentially, okay? And the potential profit. So if we kind of said, hey, which two are we going to maybe consider dialing back here? Number one is Amazon, create closing order, sell. And by the way, this always begs the question, how long does it take to sell? Okay? If you had a business that said, I'm going to sell the business, I don't like the business, it might be hard to sell the business. If you had maybe a real estate property, maybe a rental real estate or whatever, apartment, condo, townhome, house, whatever, you say, I'm going to sell the thing, it might take a while. The unusual thing about stocks is you can change what you want to do a lot quick. Well, you could change, I'll just say it like this. It could be an easier process. But however, we need to verify the liquidity, confirm and send. And now if we see illegal, this actually means that we have a stop loss on it. I need to cancel that stop loss, cancel the OCO group, okay, first. Now when we go in and sell, it's not going to say illegal here, okay? I'm going to tell you right now, you want to really focus on being solid with entry setups, but also identifying and executing what could be short-term sell signal on trades, okay? Now, if we come to the confirm and send the order. Now, are we saying that the paper money portfolio is never going to get into Amazon ever again? Of course not. What about Boeing? Now, James, I had $300 worth of gain. I gave back 116. I want to make more, but that's not the investor's job. The investor's job is to protect the capital. The investor's job is to say, look, if the trend is not in my favor, I don't want to stay in the trend. Now, what you're going to now notice on Boeing is it's trend 4. Now, the significance of trend 4 is when it's saying, could be showing that the stock is up near an area of resistance. Sometimes that resistance is where people sell, and they use that stock potentially as a punching bag, okay? And they try to sell before others sell some more and push the stock down. Now, so if it's in trend 4, has it pulled back some? Probably, but it could be up near the high. If you're waiting to sell in 5, you're now seeing more selling pressure. If you're waiting to sell in trend 1, now the response is delayed and or it was a very, very quick drop. Now, what I'm going to do is on Boeing is we're going to right click, create closing order, and say sell. We're going to go in and say sell, confirm send. Now, we're going to go to the mid price, confirm send. Now, the thing we want to be very careful about is we don't want to say things like, hey, I put my order in. That doesn't mean anything, okay? We want to say, is the order in and has it filled? Now, I can tell you horror stories of where I thought, I put my order in, and then find out a day later, the stock fell another $6, $8, $10, and I thought I was out. I wasn't out. I didn't check the order, okay? I was congratulating myself on that I put in the order, and it never filled. The gain that I thought I had, well, it was trimmed by a lot, and you learn your lesson. So you want to make sure that I put the order in, did it fill? Now, I spent some time talking on this, and we're going to spend the rest of the time on new orders because I think this is a weak spot. If it was a weak spot with me, I think it could be a weak spot with you, okay? Now, the one thing I want to kind of make sure is these things that we talked about, which we talked about the 8-day low on Friday. We talked about the 10-day low. We've talked about that historically. We re-brought it up again on Friday. We've talked about trend. We talked about the trend weekly. We've talked about the whole moving average. I think the only thing, if someone said, hey, James, I would like to actually kind of see maybe like the MAX, could I also put, let's say, maybe the whole moving average cross? Now, this is not the one exactly that we're thinking, but I'll just kind of use it for say, could you put that there as well? Sure, okay? So the whole purpose of these column headings on the monitor tab is to really kind of stop thinking that someone's going to pull up 20 positions and evaluate each one of them. The truth is, the more you see, the less likely you're going to make any decision. Fair? All right. Now, I'm not mad, but I just want to be very detailed on what we're talking about. Do you have any questions with what we talked about before we look at our examples? Any questions? Now, just real quick, John actually says, how do you see you on Schwab Live? John, can you type that in again? I just want to kind of make sure we're seeing the same thing. Just verify the question. So one thing I want to kind of point out, okay, let me bring something up. And this was a good question. JP brought it up the other day, and I just want to kind of point this out. So there's two places. So when you're considering on selling, and if you have maybe positions where you bought positions more than, let's say, one time, what I mean by that is, if we bought shares of Amazon, 50 shares of Amazon, that's it, one time, well, if we buy 50 shares, then the only shares we have to sell are the ones we bought. We bought 50 shares, and we're just going to sell the last ones we got into because we only got in once. Does that make sense? So we bought Amazon 50 shares of stock, and now we're looking to sell. Well, we're really selling the last trade we got into, known as last in, first out. Now, the one thing I want to kind of point out to you is if you bring this up, so I'm going to show you this in two different ways. If you go to schwab.com and you go in and say, hey, look, I'm going to try to sell a position, you'll see right below the time in force, like day order, GTC, etc. It will actually give you, it'll say shares, it will give you some options. Do you want to do it like last in, first out, which is pretty typical? Do you want to sell the shares at a high cost? Okay, maybe for certain reasons. Do you want to sell the shares at the lower cost? Those are sold first. Or they even actually have what's called the optimizer on schwab.com. Okay, now what it does is if you select that, it can remember how you normally like to do it. So you can pick. So if you said, hey, James, I bought a certain stock like Apple 4 to 5 times and I built a position of shares over time. And I want to specify selling at the low cost ones or high cost ones or whatever. You could actually see that on schwab.com. The second place you could actually see this is if you're on your tablet device, which this is taken from, and you say, look, I'm going to go in and sell my position, right below, when you go to send the order, you're going to see the same thing, FIFO, LIFO, high cost, low cost, etc. So you could select that. Now, here's the catch. If you bought 10 shares of Google and you go to sell 10 shares of Google, you don't really have a low cost, high cost. You just have the price that you got in at is the average price. That's what it is. Okay. But if you bought shares over time and you wanted to actually do that, there's some options there for you to consider. The one thing I will say just real quick, going back to this, you should actually, when you go to schwab.com and you actually just try to send the order, just look at the order, don't send it. But there's also some kind of reading about kind of some of the different options you have in learning about what they call the optimizer. So I think it's extremely helpful, especially if you don't have to necessarily have a huge portfolio. You just might want to specify which shares you want to sell. Okay. All right. Now let's kind of talk about this. Other questions. Okay. Yeah. So this right here, this optimizer, that's on Schwab.com. Okay. So when you go to you got your account, you look at your positions, you act like the investor is going to go in and sell the position. Right below the time in force, day, good till cancel, etc. You're going to see you want to sell the last in, first out, LIFO. You want to sell the first in, first out. Okay. And that's where you're going to see this view right here. A lot of people just don't see that, but I just want to specify that. I mean, I work at Schwab.com, so I think I can explain Schwab.com, the website. You can get into some of the details. So this should not be too alarming. Okay. Now, what I want to do, so Dragon Rider, I just wanted to say it. I'm glad Dragon Rider is having a little fun with this. So if there's no inventory, no method applied. There you go. I think we could just say we're going to move on from that discussion. Okay. Okay, good. Now, so here's what I'm going to do. Let's kind of talk about some examples here. Okay. So first off, when we see volatility increase, are there more typically bullish positions or bearish positions? Bullish or bearish? Now, this is kind of sometimes another part where people struggle a little bit. They see the market, for example, go down, and step one, could the investor focus on bearish positions, or do they focus on the positions that they're in? Now, some investors might say, James, it's a silly question. That investor might say, James, I'm going to focus what I'm in first and practice executing the exit criteria for that investor and or protection for that investor if they so choose. Then second, they might say, hey, James, are there maybe some examples of some stocks that could be pulling back? Now, is it possible to have, let's say, a bullish portfolio and a couple maybe bearish positions? Sure. Now, if I look at the positions that we actually have, pretty much 95% of them are bullish. You can do a bearish trade and where the overall portfolio is still bullish in general. Now, the example that I'm going to bring up here just real quick, and this blows people's mind, but I would kind of like to say it like this, okay? Imagine an investor says, I own a portfolio of stocks, but I also have a gold position. Well, a lot of times people buy gold maybe for a market hedge. It's the same idea, but instead of doing gold long, they're just doing a stock bearish and or short. Okay, now you might actually say, well, James, I don't do short. I'm not, that's not what I'm trying to talk about, but it is a stepping stone of learning how to maybe trade a different strategy with a downtrend. So we're learning about being short stock as a learning stepstone. You don't have to trade it, but it's actually some way that you could actually learn to trade bearish. Instead of watching stocks drop, you might say, look, fundamentally and technically, I'm seeing some stocks that could be at quite a bit of risk. Now, I'm going to bring up two stocks just real quick, okay? Number one stock is DHR, okay? Now, if you look at DHR, what you're going to notice is Danaher. Now, notice you can pick a stock like Visa, you could pick a stock like MasterCard or whatever, and you look at a stock like Danaher. The difference between Visa and MasterCard, yeah, Visa dropped today. It did. But the difference is 36 hours ago is at a brand new high. Can these stocks drop? Yeah, they can. But the risk is if those stocks drop down near support areas, those stocks could be maybe buyer step in. Whereas DHR, you're actually seeing a stock where it's not really correlated to the market as well. The market went up and Danaher went nowhere. Now, sometimes what investors will do, traders, they'll say, look, I'm looking for a stock that might be trying to get down below a support area. And if it actually breaks support, the investors might think, look, it could come down to 181. It could come down to 172, etc. So there's two things happening here. Number one is you could just get poor performance by the company in general, technically and also fundamentally. Second, the stock, Danaher, is a healthcare, it's in the healthcare, okay? So it's tied to what the neighborhood is doing to a degree. And if we go to look and analyze what you're going to notice, and there's been a lot of discussion on this, okay? A lot of people have been talking about how some of the economic backdrop that we've been seeing macro-wise, that some of these companies could be stalling out or their earnings decline. Is that fair? What you're now going to see is when you look at a company like Danaher, for the last 5 years, they have been at best flat. At best. Okay? Now, here's the deal. The earnings per share, they've been marginally better. But you got to remember, most of these numbers should be going up about 3% a year because it mimics, or should be mimicking, pretty close to what the GDP of the U.S. is. The U.S. is 2.5%, 3%. These numbers should probably be increasing 2.5%, 3% just to match what the U.S. economy is doing. So if they're not even doing that, it's like they're flat to backwards. Now, we need to say this. Just because they've been bad doesn't mean that it's guaranteed to go down. No different than if they were that hot, that it's guaranteed to go up higher. Sounds like a logical comment. I don't know. Okay, sure. But the big actually thing is the investor is probably looking for maybe something technically and fundamentally that is struggling. Now, don't worry, there's a couple stocks that are struggling. You probably won't need a search to find them. Now, what I'm going to do is I'm going to go to the trade tab. I'm going to right-click on the bid. Now, this is different than we normally do, right? Right-click on the bid. We're going to go to Sell Custom, and we're going to go to With OCO Bracket. Now, this is different, okay? Now, notice what we're going to see here is we're going to go to the margin account. Why the margin account? Because you can't short stock in an IRA, okay? Right-click on the bid, Sell Custom, With OCO Bracket. Now, there's two parts of our session I want to make sure that you do as a takeaway. Number one is I want you to review what we talked about in terms of the monitor page and helping to identify potential sell signal criteria. You need actually column headings that can simplify in folders in which you could say, okay, this is what's happening. I'm going to focus on these ones first because these are showing more severity of current selling pressure. Okay, so number one is create the folders. Number two, create the headings. And actually with that is also as third, practice even one or two bearish trades. If the market were to drop, what might be some stocks that could be at risk? Now, notice here, we don't have to do 100 shares. When you're learning about bearish trades in general, let's say the investor says, look, at first it's about the strategy first, and it's not about how much can I make. Do I understand what's going on? Now, let's do 50 shares example given. And what I'm going to do is I'm going to put this right here. This first row in green, this is the target. The target is where the investor thinks the stock could drop down to. Okay? Now, let's say the investor said, James, I think that stock could actually maybe try to pull back down to, let's say, 174. Well, if we go back to that, if we type in 174, I'm going to put that marker right there, 174. Now, what we're trying to also do is if we have bullish positions that drop, we're trying to also have some bearish positions that could go up. Let me do that again. If we have some bullish positions that drop, we're trying to have some bearish positions that could go up. And if we can even get some of those to offset, that actually is really saying that it could mean that the volatility in the portfolio might be less than what the market is. And that's why the investors try to add bearish positions when the VIX rises or defend positions. Last thing we're going to do is we're going to set the stop above the resistance. So if I go back and really say, well, where do we see resistance on this chart? We're going to set this resistance or put a stop right above today's high. What was today's high? 195, okay, 74. Add, let's say 2%. We're going to set the stop right at 199.65. Now, the biggest thing that we need to really remember here is what's the risk in shorting the stock? Okay? Well, the risk in shorting the stock is, number one is if the investor's short, they're liable to pay the dividends if it does pay a dividend. Second, they could also, for example, be at risk of if the stock gaps to the upside. Okay? So let's say the stock gaps up. Berkshire Hathaway is buying Danaher for 205. The stock opens up at 205 and the loss is bigger than expected. That's a risk. Now, that's also maybe why some investors consider derivatives over this. But it's good to see both. Now, it doesn't mean the investor can't learn from this and practice a stock trade, but bearish. Okay? Now, I'm out of my time here today. I gave you 3 parts of the homework assignment. Folders on the monitor page. Okay, create the column headings. I'm going to put in the description. I will put the scripts in the description. And the third part of the homework assignment, I want you to practice 1 or 2 bearish positions. Okay, and a part of that kind of practice here is also making sure that you practice seeing in the short term, does the investor have any trades that you could practice selling? That's a part of it. Okay, and we want to attack that and practice that here today. I'm out of my time here today. We'll be back on tomorrow morning. Remember, you can subscribe to the Trader Talks channel and make sure that you remember that all investing involves risk. And I gave you a specific homework assignment. Go out and do it. You got some time. We'll be back tomorrow morning. Thanks so much to Michael Fairborn and all of you. This has been the class on trading growth and value stocks. Have a great afternoon. See you back tomorrow. Bye-bye.